Ultimately, the biggest issue that in California that we're dealing with right now, and I talk to this about my clients every day, lack of competition. Right. I probably can count 20 to 25 carriers that are just not currently writing new business. That's one of the reasons on premiums being so high.
Welcome to CashFlow, the podcast where we talk about turning properties into profits. I'm your host, Jason Yoss, and I'm here today with my special guest, Mark Nimitz. Mark, how you doing?
Good, Jason. Yourself?
I'm doing great. Thank you for coming on, man. I'm super excited. I think I reached out right after the fires were going, and I'm like, dude, my insurance agent, he needs to get on here and needs to tell everybody what's going on. So thank you for taking the time to come in.
Thanks for having me on.
Right before going on family vacation too. So I'm glad I was able to fit you in so we can take some time. I really want to unpack what's going on with insurance. But first, talk to me a little bit about Mark Nimitz Insurance. You've been doing this for a while. How long have you been doing this? 14 years?
We've been in business 14 years.
Oh my gosh.
Got a nice boutique agency in Poway, California. Servicing about 3,100 clients, 3,100 policies, probably amongst 1,300 clients or whatnot.
Not your first rodeo.
Not my first rodeo, no. I really love kind of what we do. Kind of our specialty is just basically going above and beyond and kind of helping our clients every step of the way, especially when it comes to whether it's policy questions, billing, and more importantly, kind of holding their hand during the claims process.
I will definitely attest to that, holding hand. Like, I am a client, all full disclosure, but I like the hand holding. That's the biggest thing. I don't know much about insurance, and so when I have an issue, I'm on the phone with you like, hey, what am I doing here? What am I doing there? That's what I like the most, like that I can call my insurance agent. I'm sure I could go online and get the cheapest policy around and talk to an 800 number, somebody in India, and never hear anything about anything, but I really appreciate and value you. So I'm not just saying that because I'm blowing smoke at you. It's because I actually have gone through that where I'm like, hey, what do I do here?
No, I appreciate it. And that's, it means a lot, number one, coming from you. But the other thing too, the insurance industry is not what it used to be, 4 or 5 years ago. And there's a lot of changes, and what used to be easy, buying it online, isn't as easy as it used to be.
I believe it. Talk to me about, like, how did you, so you do mostly property, car, life, like, how'd you get into the industry in this niche specifically? Like, why aren't you doing, I don't know what insurance products are out there, but like, tell me how'd you got to this?
Absolutely. So, our agency specializes in basically car insurance, home, life insurance, business, workers' compensation, just to name a few. I got in the industry 14 years ago, spent first 3 years out of college at Enterprise Rent-A-Car.
Nice.
And then when I left Enterprise, I basically saw two opportunities. All I did actually was send my resume out on Monster.com. And I had Farmers Insurance, and then I had Northwestern Mutual reach out to me. I just grabbed a piece of paper, and I just basically drew down the center, and I said, okay, hey, here's all the products that Farmers offers. Here's all the products that Northwestern Mutual offers. And Farmers just obviously had more products to offer. Car insurance is pretty much mandated by the state. You need home insurance if you got a mortgage.
Yeah. Also mandated.
well, exactly. Obviously property managers will require, hey, we need basically proof of insurance or whatnot. Right. So it just made more sense. And I'm glad I pick that option.
And that does bring it up. You're right. Almost everything nowadays in our state, in California at least, but also I see it in my other offices, Arizona and Nevada, they are requiring insurance. Mortgages, somebody's not going to give you a mortgage if you don't have insurance on it. So throughout the ranks, you do it for a while. You have mentors that help guide you, or I understand Enterprise is a great building block for young entrepreneurs learning to operate a business, but talk to me about how you've been able to do it for 14 years.
I think number one was obviously kind of get a lot of support from my wife. So she's number one. Number two, I have a colleague that he's beat me in the business by about, I think, 2 or 3 months. But John Meyer is an agent up in Temecula. Him and I used to basically sit inside a cubicle together with a giant whiteboard, and we basically I kid you not, grab the white pages and then open it up, right? And then basically say, okay, hey, I'm going to call, Aaron Aronson, right? And then boom, boom, boom. And if we, basically, hey, we want to talk about your insurance, right. We got a sale, we'd basically put that number on the whiteboard. So going from that to kind of basically both of us having our operations kind of keeps us going. and keeps us successful. So we talk about our wins, we talk about our losses, but it's nice to have like a friend and like confidant to like bounce ideas off of too at the end of the day.
I love it. Yeah, having a strong colleague, somebody that you have grown up in the business does help. Let's shift and talk about philosophy. People are looking for an insurance product, and it's somebody like me. I don't know the first thing. When I'm buying properties, I'm getting property investments all the time, duplex, fourplex. I don't know the first thing about what I should be looking for. What's your philosophy when you talk to your clients about purchasing insurance?
I mean, number one, they want to make sure that we have adequate coverage, right, to rebuild their home in the event of a loss, right? Okay. And when we say loss, we're really thinking fire. Like a fire is going to come and just destroy your home. We want to make sure that you have ample coverage to rebuild not only your structure, right? But we want to make sure that you have coverage for, say, loss of use, right? Which basically is going to cover your hotels or your additional living expense for that 12 or 24 month period, whatever it is, depending on the policy. And so literally just our job is to basically educate our clients so they can make an informed decision.
That's huge, especially I think in my industry on the property management side. I always ask people about, hey, do you know what kind of insurance cover you have? And a lot of them don't know they are supposed to have a rental rider. I only know that because I'm in my side of the industry. But again, if they don't, they're just buying online. Who knows what they're getting? So good to hear that. Let's shift back to kind of what you said when we started. Why is insurance going so crazy the last couple of years? Like, what is it? And let's talk California specific. What is it that has made the market more difficult? And maybe just as an example, premium wise, like I'm paying way more than I was the year before that, the year before that. What's going on?
So the hardest part is obviously 2020, we had the pandemic, right? So basically for 3 years from kind of right at the start of the pandemic, which was March 2020, up through basically first quarter 2023, there were no rate increases on the auto insurance side for any carrier in California.
And is that why? Is that just nobody was doing it, or was that it was part of the COVID mandate, like a moratorium, like, hey, rates have to be still? Like for rents, we had that kind of thing too.
So the only one that basically can authorize those increases is the Department of Insurance.
Okay.
And basically the carriers can submit the request to the Department of Insurance, but ultimately they have the final say in making that decision.
And they weren't authorizing any increases during that COVID period.
To what I heard, the issue basically came in that a lot of carriers gave premium back for a few months, the first few months of COVID.
Sure.
So a lot of them gave anywhere between, I think, 15 and 30% of, let's say your auto insurance premium is $600, right, for 6 months, right? So it's $100 a month. So they say, hey, we'll give you 25% back of your monthly premium. So call it $25, right? And we'll do that for April, May, and June, right? Collectively, I think all carriers gave to the tune of, I think, of about $3.5 billion to what I heard. Again, I don't remember where I heard this, but the Department of Insurance wanted the carriers to give back $5 billion.
Wow.
And so because the carriers didn't do that, he basically said, I'm not authorizing any rate increases for basically that 3-year period.
And that makes sense, the logic of like, hey, COVID, we're giving back to our clients who are our constituents who have gone through a lot. And then if we're not able to give it back in dollar amounts, we're going to give it back in like less rate increase. And again, not trying to hold your feet to the fire, but that does make sense to me. Now that rates can go up, have they been able to go up? Is that like now? Is that what I'm seeing? Is just overall like, hey, rates are up, so rates got to go up? Or what is it?
So he got reelected in the end of 2022.
Okay.
And then at that point, then he started to basically authorize rate increases for all carriers in California. And so the rates did increase, and they started in the first quarter of 2023, and gradually kind of still increasing to this day in February 2025.
And is it focused on just like car, home, fire-based insurance, or is it everything? For example, like I have a business policy or a general liability policy or a E&O policy. Is that going to be just as affected, or is it specific to certain areas of the insurance market?
That specific was basically just auto on the auto insurance side. Home insurance, completely different animal.
Okay.
Carriers were still basically allowed to take the rate. The biggest problem and kind of going back to the auto too, Jason, obviously with COVID, a lot of people were driving less than they were then. You know, a lot of people were working from home and not working from the office. So that kind of changed. So that rolled back premiums. So carriers were losing premiums on that angle as well, and then having to give back premium too. So there was a big disconnect between a lot of the carriers and the department. On the property insurance side, again, they could take the increases. The problem is basically just these catastrophic losses. And it's not just California. I mean, we're talking about, you know, fires, hurricanes in Texas, Colorado, Florida, Hawaii, right? And it's just, unfortunately, it's become a nationwide problem. And so what started as a California and Florida problem has now collectively just hit the entire nation.
That's it's interesting that the more catastrophic damages that we have, weather driven most likely, the more our insurance policies are going up because these are nationwide companies. So it's come to a head, basically.
Another big difference too is every insurance company has what's called reinsurance. And to explain reinsurance, basically kind of on a Cliff Notes version, is the reinsurance goes out and purchases. When they insure somebody's home, they're purchasing insurance to cover that insurance.
Sure.
And it's used for basically catastrophic losses.
Got it.
So somebody's home burns down a neighborhood, not a catastrophe.
Right.
We have a wildfire that breezes through, 1,500 homes, major catastrophe.
Right.
And so what they do is they pull that reinsurance money to pay for those claims.
Got it.
That insurance company, whoever it is still paying those claims from basically their bottom dollar, but they're pulling it essentially from that reinsurance purse. And when that reinsurance money is up, then they have to go back to whoever's providing them that reinsurance to basically obtain more.
That makes sense. They're hedging their bet, and when something catastrophic comes, they have to cash in that hedge. Let me ask you, in something like a once-in-a-generation, LA fire where, thousands, I think it was like over 15,000 structures were burned down versus I think the fire in the 90s, it was like 1,500 structures. So a huge difference. How is that going to affect the landscape, in your opinion, for the next, 5 years?
Ultimately, the biggest issue that in California that we're dealing with right now, and I talk to this about my clients every day, lack of competition.
Right.
We don't have a lot of competition.
Okay. What does that mean when you say there's a lack of competition? There's just a lack of number of insurance carriers I can call to insure my home, insure my property? Is that what it is?
So 3 years ago, right? You had USA, you had Allstate, you had State Farm, you had a lot of these options out there. So if company A, B, and C wasn't within your dollar appetite, you could call D, E, F, G, H, I, J, K, and so on the list. Now, there's not a lot of, I probably can count 20 to 25 carriers that are just not currently writing new business, including the ones I just mentioned. And the biggest problem, obviously, is and again, the conversation I have with clients, that's what's driving premium. That's one of the reasons on premiums being so high. And they fire back and say, well, you have more clients bringing in. Isn't that bringing premiums down? I'm like, here's how you need to look at this, right? Yes, we're insuring, say, 500,000 more homes, but that's risk that, believe it or not, the insurance companies would like to take if they could properly get the rate that they need. That's the problem, is the carriers cannot get the rate that they need.
Makes sense.
When you basically add the rate plus the potential risk of catastrophes across the country, a lot of carriers are like, hey,
I don't want to deal with it.
Exactly.
And it makes sense because the government plays a part, like we talked about, in setting the rates. And just standard supply and demand. There's still the same amount, or maybe growing a population in California that has property that needs to be insured, but the amount of supply, the amount of insurance is less because you have less character. And so that, in my mind, makes a lot of sense. Not that I like it. I don't want to be paying more for property coverage, but like we talked about before, you got to have it. Or if you have a mortgage, they're going to say, like, no, we're going to give you insurance, and it's probably higher. So let me ask you to kind of debunk some common, not debunk, but okay, there's major fires. My home's been burned down. Like, what are you telling your clients to do in that kind of case? How are we going about the process?
I always tell our clients, call our office first, right?
Okay.
We essentially want to be able to kind of be that first point of contact when, God forbid, something happens. And the next thing we do automatically is we call the insurance company and notify them of the loss so they can get started. The adjusters, regardless of what carrier involved, have done a fantastic job as far as reaching out. I mean, example, kind of what we saw with the Palisades and the Eaton fire.
Right.
I mean, every carrier that I have heard that has, reached out to a lot of clients. I think I saw a number that so far, the number of amount paid out by the insurance companies, again, so far is just under $5 billion. But there's still probably, and that's like 32,000 claims.
Right.
And I think 11,000 of them have been partially paid out.
Right.
So again, we still have another 20,000 claims or so to essentially go through. But again, I think all the carriers from what I've heard from other parties that have been affected, whether it's been my company or somebody else, have all done a pretty stand-up job as far as making sure their clients are taken care of.
And I love to hear that. And that's super important. So then take me through the sensationalized fake news, if you will, of people aren't getting taken care of, or there's not enough money, or, the federal government needs to come in. Like, talk to me through a couple of those bullet points that you're able to easily say, like, well, this is not true here because of this, or this is not exactly accurate because of this.
The number one biggest thing that we get a lot of calls from is the California Fair Plan.
Okay.
Which, when they hear the word California, they automatically think that this is funded by us as taxpayers.
Mm-hmm.
And that basically, the governor is basically in charge.
Holding on to their money, yeah. Telling them
Exactly.
Right.
When in reality, the state has absolutely nothing to do with it, and it's not funded by taxpayers. It's funded 100% by insurance companies who are operating in the state of California, property insurance companies.
Got it.
So, there's supposed talks of insolvency that the Fair Plan would deal with.
Really?
But at the end of the day, there's no insolvency, because essentially what they would do is they would just assess each carrier that pays into it, whatever sort of fee.
Sure.
And then it would just continue. So
that makes a lot of sense.
I don't see the Fair Plan going out of business.
And when the federal government does come in to provide aid, is that help the insurance companies out, or does that money go directly to a client? Have you ever dealt with something like that when, like, fires here in San Diego?
That's a great question. I personally don't know that answer.
Sure.
But I will tell you that, just in past talks with clients who've gone through flood problems,
Right.
say 20 some odd years ago, basically it comes down to this. If you have flood insurance, as an example, you're going to have a payout.
Yeah, right.
If you don't have flood insurance, the government might cut you a check for $500 if you're lucky,
Yeah.
to pay for food. But, as far as your house damage and everything else,
They're not going to pay out.
no.
So, and just real quick, tell the audience about that difference between your policy normally is a fire policy with maybe some other bells and whistles, but a flood policy, what's it based on? Who puts it out? And how do you know if you need it?
That's a great question. Flood policy, you really have two options. You have one option, which is the National Flood Insurance Program, which
Right.
is basically sponsored by FEMA, the government. And then you have basically private insurance companies, and then they'll essentially provide you coverage for your dwelling and for your personal property. The biggest difference is, really just based on premium.
Right.
If you're in a low flood zone, premium could be like $500 a year.
Right.
You get like $250,000 of coverage. If you're in a very high flood zone, something that they don't necessarily want, your premium could be astronomical, 2 or 3 times your annual cost for property insurance.
Sure. It's funny that you say that. I owned a property in a flood zone. I was notified, but I was a young investor at the time. When I was buying the home, I didn't realize what that meant. But I learned very quickly, every year I have this additional premium. And at one time it was, very low, like you said, $500. And then it eventually over time went up a little more. We never had a flood. I was always waiting for the Army Corps of Engineers to maybe remap the area so I would be out of the flood zone. But I do remember, but my experience with them was very easy. Once you sign up for the plan, it just rolls, and that was it. But I never had a flood, so I never had to use it. So. And it was separate from my insurance policy, though. Take me through, let's talk California and San Diego right now. when are things going to change? I mean, when we talked about how it was and how it is right now, when's it going to change? What do we need to have happen, Mark, for insurance to change here in California?
Just going
with
back
your
to
crystal ball, by the way, if you can get that out.
Going back to what I said, I think a lot of it stems from not having the competition here. If we got competition back, if they came back into the California market, I honestly believe, I don't think it's going to bring premiums down, but I think it would help stabilize those premiums.
Right.
Now, again, I don't know if that is truly the answer. And I've been telling my clients for the last 2 years, hey, it's going to get better. It's going to get better. Unfortunately, it hasn't gotten better.
Right.
And so a lot of individuals are stuck. And I talk to real estate agents daily who say, hey, Mark, I actually had a case where one of my clients was in the process of moving to a different state. And their home insurance premium in itself was $10,000 a year.
Okay.
They said, hey, our new buyer is going to call you. Okay. Appreciate it. Thank you for the referral. They called us. We had, we basically tried to put one option with farmers. Farmers wouldn't take it just due to his high fire. The only other carrier that would basically take it, it was $60,000 a year.
A year.
So 6 times the premium of what my current client has, with fire included.
Right.
But obviously a major deterrent from that person purchasing that property.
And you know what? I've heard other people, guests of the show like Dan Tremello and other people in the industry say it's not mortgage rates that are hurting the home buying industry. It's insurance rates that are really hurting it because of that example that you just gave. The past owner had $10,000 premium for insurance coverage, and the new homeowner is going to have $60,000. That's crazy. So more carriers will come back. Hopefully we'll have a more competition and more ability to provide premiums which will lower the rate. That's the idea. Hopefully.
Hopefully. Like I said, I don't have a crystal ball, Jason, but
Shake
it's one
that too.
I know. It's one of those things that, again, I'm a consumer. I'm the agent, but I'm also a consumer.
Sure.
So I want my rates to go down, know. And it's just a crummy situation, crummy market for everybody. Our job as agents is just basically, like I said, kind of what I told you in the beginning, basically hold our clients' hands and educate them as much as possible, because it is a tricky market. You talked about fire insurance, right? There's a lot of, when you're insured with our agency, you're essentially covered for fire. And that could be your home policy just covers fire, or you have, what's called the difference in conditions policy. And then you have a California Fair Plan policy. The Fair Plan policy is going to cover the fire. So when you have those two policies together, it's like your normal standard homeowner's policy. But again, when you're dealing with our clients, we tell them, hey, you're covered for fire.
Right.
Don't stress.
If you're not in flood zone, don't worry. You don't need flood insurance. We talked about it more. There's more to it than just rate. There is that ability for the insurance agent you have, not only help educate you, make sure you get the right plan, make sure you're totally covered, but also when things do go wrong, you can pick up the phone. Let's talk a little bit about some wins that you've been able to deliver. Give me an example of something where you're like, hey, this happened and I was able to step in and actually affect some real change or savings in what was going on the insured plan.
I think a good example, I may have told you on the phone, kind of one of my favorite stories is a current client of mine was referred to me by another client. At the time, I think he started off his text or his call, said, hey, my buddy, he had a Mexico insurance policy, drove his vehicle down to Mexico, got into a wreck.
Right.
He's been dealing with the insurance company and the broker for 13 months, hasn't seen a single penny.
Sure.
He's got his vehicle insured for $70,000, which is the maximum amount allowed on that policy. Can you do anything for him?
Right.
And I said, I like challenges. I said, let me see what I can do.
Right.
And so I remember communicating back and forth with his wife, and I was able to actually find out who the U.S. parent company is of that Mexican insurance company.
Got it.
And I was able to basically find who's in charge of their Mexico insurance division, get them on an email and say, hey, look, this guy did everything you asked him to do. which normally when you have a Mexico insurance policy, you're in a wreck in Mexico. They usually require you to file the claim while still in Mexico. So he did all that. The one issue that he didn't do is he actually called the wrong insurance company.
Okay.
Because with them, it's basically HDI Seguros and
Right.
ACE Seguros.
You're just reading off your sheet right there, like, who do I call? I got a wreck.
I call Seguros.
Yeah,
right?
right.
Okay, well, which one? Yeah. Right? So he called one. Fortunately, obviously, their calls are recorded. They were able to essentially send that information to the property insurance company.
Right.
The only issue is basically they had one adjuster who only spoke Spanish,
Right.
to communicate, and he was, I think he was like a 1099 employee, so he wasn't even like their actual employee,
Right.
meaning that he kind of only answered when he wanted to answer.
Fair enough. I've seen a lot of that.
Again, I had to step in and just say, hey, look, I'm an unbiased third party. I'm just trying to help him out, kind
Right.
of being as an insurance agent. And they said, well, send us all the paperwork. We want to know, because the insurance got the frame in his garage, right? I mean,
Really?
charred remains of the frame
Wow.
still in his garage. So we want to see everything that has been done to this truck, right? Prefab, post-fab.
Right.
So the client's wife legitimately brought like a huge folder
Right.
of all this work. And I think I spent 2 hours scanning it
Right.
into like 5 separate zip files. I sent it over to the insurance company. 2 weeks later, the client had a check in his hand for $70,000.
That's huge.
Less his deductible, which I think was $500 or $1,000.
I love it.
It was one of those things where they took 10% off the top, and the only reason they did that, they said, hey, we'll give you 2 options. You can have the $69,500, but you have to drive the frame 7 hours into Mexico.
Yeah.
Or we'll give you $69,500 less 10%, and you can keep it. So he opted for
Good negotiation to get some of the money, but stepping in and be able to help navigate the paperwork and get it to the right place, that's huge. And again, in my own experience dealing with loss, calling my agents to help me, what is the best route to go? It's so important to have somebody who knows how to handle these things. So I really appreciate that insight. And again, it shows it's more than just rates, which is super important. I want to kind of, as we wrap it up, talk about like kind of lasting advice for our property owners and real estate investment entrepreneurs when it comes to insurance. Everybody always seems to view it as an afterthought. What's your piece of advice for them?
Number one, carry a large deductible. That's a good way right there to kind of take off some of the blow as far as increased premiums.
Sure.
Obviously, the conversation with our clients is, hey, we want to make sure that you have this money potentially readily available. Right. And that's the other thing is people are so kind of unaware of the process, right? Because they may have never been in a claim. So like a good example, say, hey, let's say you have a $10,000 property deductible and you have a $50,000 loss. We file the claim. The adjuster's going to basically be in contact with you, and they're going to essentially write up an estimate, all right? And they're going to say, here's your estimate, Mr. Jones, $50,000. We're going to subtract your $10,000 deductible. We're going to write you a check for $40,000.
Got it.
You then, in turn, would take that $10,000 that you had deducted from your claim, and you would pay that to your general contractor,
right,
to start the work.
You're right. A lot of people don't know the claim process and how that works. And again, to have you there to be able to help navigate them through that is super important. And again, property investors, like I said, we always are not focused on the insurance part. We're always, how can I get the rate? Am I going to make money here or there? So great feedback. Any last takeaways on the industry alone? Just in terms of, you've been here for 14 years. What's your walk away lesson that you want everybody to know about insurance in California?
Insurance isn't going to, companies are not going to, they're not going to go away. They're not going to go, the majority of them, the bigger ones, are not going to go insolvent. Mm-hmm. Some of the smaller ones may. And we've just, it's kind of a cyclical thing. The last time we had a catastrophic loss was, I think, about 10 years ago. Some unknown companies kind of folded, but the bigger ones will still be around. So to kind of just reassure just the client base on that angle. Nice. And again, I mean, the second thing is we just need the competition back in the market.
Right.
That again will hopefully stabilize the market as far as rates are concerned. But until we have that, I mean, there's no hope for lower rates on the horizon.
It sounds grim, but I know in my heart that things are going to get better because the market is always cyclical and it does get better. Mark Nimitz, thank you so much for joining us. Everybody else, thank you for tuning in to CashFlow, the podcast where we talk about turning properties into profits. Stay tuned. We'll see you next time.